Welcome to the part 1 of Renko trading strategy series. In this Renko trading series, I will be teaching how to use Renko charts from day trading, swing trading and positional trading point of view. So let's get started. So the first thing that I want you to focus upon is that Renko chart only measures movement in price. There is no time element factored in Renko chart, and this is something I will explain in the subsequent slides. Now there will be many softwares where you will be hearing the word Renko brick chart. Now the main reason for this is that the word Renko is derived out of the word Renga, which actually means bricks in Japanese. This is the main reason why this is referred to as Renko brick charts as well. So with Renko charts, you would have seen that each brick is actually joined with the another one at the corner point. Now this is how Renko chart is plotted, and this is one of the main reasons these are so distinctive and easy to identify. Now when it comes to calculating the brick size, you can do so by adopting the traditional method that uses the closing price. Then there is also the high-low method. There's also ATR based method, but there are some disadvantages with this particular method. I will highlight those towards the end of the video. There is also a method based on fixed percentage calculation, and that is also something we will see as this video progresses. Now the main use of Renko charts is that it represents trends smoothly. And if you are familiar with something like point and figure, Kagi, line break, even Ikeneshi, these all charting methods actually represent trend smoothly. So if you're a trend trader in the market and you do get worried about counter trend movements and that affects your overall psychological profile, then Renko charts and these charting methods are something you should explore in detail, because that will help you ride trends better.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.
So let me just quickly explain how this chart is plotted. So I have the S&P 500 index on a daily time frame chart, and I am using the traditional way of plotting Renko charts, and box size, that is brick size, is 5 points. So when price moves from 25.20 to 25.25, you then get a brick being plotted. Again, when price moves from 25.25 to 25.30, again you see one more brick being plotted. And this is where Renko charts are really helpful, because they are only plotting price in the direction of trend, and it becomes much easier to identify the overall trending structure of the chart in one go. And this in turn helps you plan your trades better, and it helps you ride the overall trend, which actually gets difficult sometimes when you're using the traditional candlestick charts, bar charts or line charts, because there you can see counter trend movements, and that does affect your psychological profile. So let me just show you how Renko charts are different. So this is a standard candlestick chart. Here price has gone from 31.20 to 33.30 and then back to 32.20. Now index is again S&P 500 index. This is on a 5-minute time frame chart. Now why Renko charts are useful is because let's assume you are long in the market. Look at all these counter trend retracements that are happening. Look at these regions, also these regions here where price retraces sharply. So let us assume you have taken a long position here on a breakout, and next day you see this particular price action here. Now 9 out of 10 traders would exit their position because they start getting scared here. Now this has happened to all of us, and this is how real-time trading works. And this is where Renko charts are so different and so helpful. Now let me just pull up the Renko data for the same chart that we saw here. Now if you see the Renko chart here, what I've done is I've used the traditional way of calculating the brick size, where each brick size is of 20 points, and the index is S&P 500 index. That is the same data that we saw in the previous candlestick chart. So look at this particular chart here. When price is moving up in this particular Renko chart, you can't see these counter trend movements happening. And this is one of the main advantages of Renko chart, because at one snapshot, you can clearly identify at these points that trend is on the upside. And same thing applies on the downside as well. Now there is one caveat here, that when a gap occurs on the chart, that is on a candlestick chart, you can clearly see gaps here. But when it comes to Renko chart, there are no gaps. Now, which is why at times you will see on a day when gap occurs in the market, you will see 3 to 4 Renko bricks plotting simultaneously. And this is something I will discuss towards the end of the video as to how you can manage this. Now pay attention to the chart in front of you. Now this is again S&P 500 index on a 5-minute time frame chart, and this is candlestick charts that you can see. Now I want to differentiate between a standard candlestick chart and a Renko chart with respect to time element here. Now if you look at this particular candle, this candle is plotted at 1 a.m. in the morning. And as new candles form on the chart, that is new data comes in, at each 5-minute interval, you see these candles being plotted. Now what I mean to say is that depending on which time frame you have selected, in a standard candlestick chart, candles do get plotted as that time interval finishes. So in this chart, with every 5 minutes, you will see a new candle being plotted on the chart. Now this is where a candlestick chart has element of price and time factored in. Now when it comes to Renko chart, you only have element of price factored in. And this is what I had mentioned at the start of this video, that is Renko chart only measures movement in price. There is no time element here. Now there are a few softwares including TradingView where they do take into consideration some bit of time element as well. And this is mainly because Renko charts traditionally are plotted over tick data, and that is where they are so accurate. But in TradingView platform, they have explained, and I think this applies to even investing.com and some other platforms out there, that they do take into consideration time element as well. Now, this is something I will explain towards the end of the video as to how Renko charts are plotted on TradingView.com and some of the other platforms. Now, this is the same data that we saw in this particular slide, and look at how this chart changes as soon as you plot it in Renko format. So in this particular chart, the brick size is set at 1 point. So as price moves from 32.40 to 32.39 and then to 32.38, brick will be plotted on the downside. So this chart that you see in front of you is a 5-minute time frame chart of German DAX index. Now this range that I have marked on the chart, this has lasted for 1,274 bars, that is over a span of 18 days and 17 hours. So the reason I have selected this particular example is because I wanted to show you how this looks on a Renko chart. Now this is the same range that you saw playing out over a period of 18 days that is represented in a concise manner here. And I hope you can clearly see how concisely Renko chart represents entire information on the chart. In this particular chart, if you see price is plotted over Jan 6th to February 4th, that is almost about a month of trading, roughly 23 days. And that same activity here is represented in a concise manner. And you can clearly see what is going on in this particular range. So when it comes to visualizing a trend or identifying a trend, these are the main two aspects where Renko charts are really helpful. And as a trader, if you use only line chart, bar chart, or even candlestick chart, I think you should include Renko charts in your trading arsenal as well. And this will help you analyze overall trends better. So when it comes to software options with respect to Renko charts, now I have personally tried all these options, and that is why I can comment only on these options. Now, if you are someone who has a software out there that plots Renko charts, you can send it to me for reviewing it, and I will give my honest opinion to the community for their own benefit. Now, what I felt is that when it comes to proper softwares, that is desktop softwares, I feel NinjaTrader is the best software out there for Renko charts. And when it comes to online option, I would prefer something like TradingView website. Even Renko is available on investing.com, but in my own opinion, data quality of TradingView is superb. And even the way charts are structured, the way they appear, even on your mobile devices, I think TradingView when it comes to online website is clearly the best option when it comes to Renko chart. And when it comes to a PC software, then I think I would prefer something like NinjaTrader as well. So I have shared the link of NinjaTrader website in the description box and the comment section below. And I've also shared the link to TradingView website where you can view the different plans that are offered in TradingView. Because when it comes to NinjaTrader, this platform is free, but you will have to pay for the data cost. And when it comes to TradingView.com, you get the platform and the data in one particular subscription cost. I don't remember what it is, but I think you have to subscribe to Pro Plus or the premium plan. So let me just explain the 4 main methods used to plot Renko charts. So the first method is the absolute method. This is also the traditional method where Renko chart is plotted using the closing price. So you will have to decide the brick size on your own, and the value of brick size will depend on your own trading preference. That is whether you want to do day trading, short-term trading, swing trading, or positional trading. For each of these trading styles, brick size would be different. The second method is the ATR based method, where brick size is automatically decided with respect to volatility, and for measuring this, standard ATR 14 indicator is used, and I'll be showing you in TradingView how this brick size is automatically selected and then Renko chart is plotted by the system. Third method is the high and low method. Now it is very similar to the traditional method, the only difference being that in the traditional method, closing price is used, whereas in the high and low method, in order to plot a new brick, high and low value of price is used. And again, this is something I will cover in this series, so don't get confused with all these types here. The fourth type is the fixed percentage type, where brick size is determined as 1%, 2%, or n% depending on what you are trying to do in terms of trading. Now, out of these all four methods, which one you should prefer? Well, my take on this is very different, because you will find some traders recommending the high-low method. There will be some who will recommend only the fixed percentage method, and there'll also be some traders who will recommend the ATR based method. Now, when it comes to me personally, I've always preferred the absolute method or the traditional method where closing price is used. Now, as a trader, I have found more comfort in using this traditional method, and I will strongly encourage that all of you should experiment with each of these methods to see which suits you best. Now, once you have identified your own method in which you want Renko charts to be plotted, you can then apply whatever strategies I will teach you, because those strategies are not dependent on how you plot Renko charts. So for me, when I want to do long-term trend analysis, I always prefer the fixed percentage type Renko charts. And when I want to do something like short-term trading, day trading, or even swing trading, I'm more inclined to use the traditional method or the absolute value method. So I completely ignore the ATR based method and the high and low method. Somehow these methods have never appealed to me, and that is why my combination when it comes to Renko trading is the traditional method and the fixed percentage method. So let me now show you how Renko brick is plotted on TradingView. So what I have here is the market is open. It's currently 9:55, and I have selected the 5-minute time frame here, and using the traditional method, I've set the brick size at 5. So if you look at this particular brick that is printed, the closing price of this brick is 12,015. Now later when I send the video out for editing, I will mark out where you can clearly see the closing price as of this brick where my cursor is. So currently price is at 12,014.15. So look at my brick setting, it is 5 here. So for a new brick to be plotted on the upside, now come to this particular brick that has already been printed. The opening of the brick is at 12,020. So for new brick to be printed, price will have to move above 12,025, and that too it has to sustain for 5 minutes, because on TradingView, the interval that you select for that amount of time, the brick has to sustain about the relevant price, only then the brick gets plotted. On the flip side, if you take the closing price of this brick, it is currently at 12,015. So for a new brick to be plotted on the downside, value of Nifty here should close below 12,010 on a 5-minute interval chart. I hope this aspect is clear. So just about 20 seconds more to go and price is at 12,026. So if we can sustain above 12,025 for about 20 more seconds, then you will see a new brick being printed here. So the formula is the opening price of this particular brick plus the brick size that you have chosen on a time frame chart. So there you go. It is now 10:05, and here you can see a fresh brick is printed. Now the reason this got printed was because in the previous brick, the opening price was at 12,020. So price had to sustain above 12,025 for a 5-minute interval for this particular brick to be printed. So now if you see, the latest printed brick becomes this one where I am putting out my cursor here. So the closing price here is now 12,025. Now for a new brick to print here, price would have to sustain for a 5-minute interval above 12,030. Why 12,030? Because the previous closing price of brick was 12,025 plus the brick size that you have chosen. I hope now you understand how brick is being printed on TradingView. Now software does most of the work, therefore you don't have to worry about these aspects, but I still felt that in case you can see this live, you will understand Renko bricks better. Now just rewind the video by about 4 to 5 minutes and watch this entire brick session again. That is the printing of brick. Now the reason I tell you this is because this is foundation of Renko charts, and if this is clear to you, then you will be able to visualize bricks being printed on the upside and downside as the market is playing out on real-time basis. And the reason why I've showed you this on TradingView is because I will be explaining all the concepts on TradingView platform, and therefore you need to be aware of how brick is printed on TradingView. Now in case you're using some other software, refer to their documentation and do learn how bricks are printed on the software that you're using. Now the reason I say so that you need to refer to the documentation of your Renko software is because look at how TradingView explicitly specifies how they are plotting Renko bricks. Now TradingView states that Renko brick calculation requires tick data, and as a compromise, TradingView uses the chart's resolution close value, which means for a 10-minute Renko chart, they will be using 10-minute closing price to generate bricks. Now this is the main reason why I have asked you to look at the documentation of your software, because it's always important to understand how your software is plotting Renko bricks, and then you can adapt accordingly. So let me now explain a few things about selecting the right brick size. So let's assume you are a beginner in the market. I would actually recommend you to start with the daily time frame chart. So on a daily time frame chart, if I have selected Nifty as an instrument, it can be any other instrument, and in case you're confused with any instrument you trade and you want to know the right brick size, do let me know in the comment section below and I will suggest the same. So what I do is I select the traditional method, and if I want to trade over the short term, I usually do this by setting the brick size at 0.5% of the current market price. So the current market price is 12,030, 0.5% would be somewhere around 62, 63 points. I'll just set it to 60. So when I set it to 60, the Renko chart changes this way. So 60, that is 0.5% of the current market price. I use it for short-term trading. If you want something like swing trading, then you can change this value to whole 1%. That is 12,030, 1% would be roughly 120 points. So for swing trading, there you go. That is the chart you will get when you select 120 points. That is roughly 1%. Now, the thing is that initially you will require some bit of experience when it comes to identifying the right brick size. Towards the end of the video, I will suggest why you should be starting with higher time frames first, and then you should be learning the Renko method, and then you can experiment with lower brick values. But initially try and trade in the direction of trend, because that is how you will learn the Renko method. So what I'll recommend here is that do join the Renko Telegram group, because after I release this video, I will post out guidelines as to how you should be plotting brick value and the ideal brick value size. So do join the Telegram group. I will update rules for brick sizes on the Telegram channel. So let me now explain how the ATR based method works. So if you look at TradingView, there are only two methods available for plotting the Renko brick. That is the traditional method, which I mainly use, and another one is the ATR method. Now in the previous section, I've just shown you how you can use the traditional method and the percentage based method, where you enter the brick size depending upon the current market price, where I showed you for swing trading, day trading, how you can set different brick sizes as per the percentage of current market price. Now the second method is the ATR method. So under the ATR method, the default average true range value is 14, and the brick size, if you see, is determined automatically by TradingView software. So this is the daily time frame chart. If I switch down to something like a 5-minute time frame chart, you will automatically see this value change. So what usually happens is that the current plot that you see on the chart, that is the current Renko plot, the ATR value is 12.9, and hence you see this Renko structure visible on the chart. Now suppose after a couple of hours the ATR value changes and this becomes something like 14 or even 11, what you would see is that the entire Renko structure chart would be repainted and this structure would change. Now this is one of the main problems that occur when you're trying to use the ATR based approach. So if you can adapt to this change, then you should also try out the ATR method, because after all this is linked with the underlying volatility, and any method that uses volatility is always a good method to experiment with. But just bear in mind that as soon as the ATR value will change, the entire chart structure will also change. So if I now switch down to something like a 15-minute time frame chart, so the ATR value would certainly be different. So here it is about 23, and there you go, the chart structure is also different. So irrespective of the time frame, whether it is 5-minute, 15-minute, even if you select something like 30-minute, the ATR value does change and it incorporates the underlying volatility that is present in the underlying instrument. So do take this also into account. So there are 4 main methods. One is the traditional method, second one is the ATR based method, third is the fixed percentage method, and the fourth one is the high and low method. Now I mainly use the traditional method and the fixed percentage method, but I would strongly encourage for you to experiment with all these to see which suits you best. So now that I've shown you how the traditional method and the ATR based method is calculated on TradingView, let me now address a few concerns about the absolute method or the traditional method. Now the reason why traders prefer the ATR based method is because the brick size is automatically calculated in the software, and hence you don't need to determine the brick size on your own. So the brick size in the ATR method is determined based on the underlying volatility, which is represented by average true range indicator. But when it comes to the traditional method or the absolute method, in this you have to determine the brick size on your own. Now this will vary from instrument to instrument, and this is where some amount of experimentation is required. So for the time being, if you want to trade some instrument and you do want to know about the brick size, just let me know in the comment section below and I will suggest the appropriate brick size with respect to what you want to do, that is either short-term trading, day trading or swing trading. So now that I have explained the various ways Renko chart is plotted, let me now come to a very important concept of wicks and tail in Renko chart. Now if you are using softwares that do not plot these tail and wicks, then let me tell you, you are at a disadvantage here, and you should prefer softwares which clearly plot Renko wicks and tail. Because in subsequent parts, I will be showing you how powerful these patterns are and how to identify entry opportunities in the direction of trend based on the overall Renko chart structure and how these tails and wicks fit into those. So let me now address an important aspect as to why most beginners fail with Renko charts and why they abandon this plotting technique. So let us assume in this entire chart there is no gap that was formed. So the way a beginner uses Renko chart is that as soon as they see a red brick being formed after the green brick, they go and short sell here. And similarly, as soon as they see a green brick here, they assume that trend has reversed and they initiate a long position here. Now, when a chart looks like this, that is a pure trending chart, then these strategies will work. But when a chart looks like this, now this is where a beginner usually abandons Renko chart technique and moves on to another technique. The main reason being that all these points that you see, these are whipsaws that a beginner will go through when it comes to trading with Renko charts. So this is why what I want to tell you is that in case you're a complete beginner when it comes to Renko trading, avoid taking trades simply because the brick color has changed from either green to red or from red to green. In larger scheme of things, this is completely meaningless and you shouldn't be trading this way. So as this series progresses, I will show you how to analyze the overall chart structure of Renko and when you have to initiate trades, that is long and short trades with respect to day trading, short-term trading and even swing trading. So let me now explain what is Renko reversal. Now each time that you see color of brick changing from green to red and from red to green, that is a potential Renko reversal visible on the chart. So just in the previous section, I showed you how beginners use this reversal to keep changing their positions in the market, and that is not the right approach to trade Renko charts. But whenever, irrespective of your brick size, the color changes from green to red or from red to green, that is stated as a Renko reversal. Now the reason I am calling this Renko reversal is because I will be using this term in the subsequent parts, and you need to be aware of the trend change that is happening whenever I use the term Renko reversal. Now Renko charts can be easily integrated with the traditional technical analysis concepts and tools, and this is where I will just show you how you can easily combine both of these together. In the subsequent parts, all these things will be covered in great depth. So for example, I'm just showing you a couple of sides with respect to Renko and support resistance, but in the second part, there is an entire video that is dedicated towards using Renko as support and resistance tool. So in this chart, if you look at this particular region, look at how many times trend change is happening in this particular zone. So this automatically becomes a strong support level on the chart. Very close to this support level, you again see this support zone developing where price pauses around this region and then starts moving higher. If you also just combine, if you draw a line here, later on I'll mark it out when the video is sent for editing. So this particular support zone is forming exactly near this resistance zone on the chart. So this is a classic case of resistance turning into support here and then price moving higher. If you again take a look at this example, you will find such charts a lot when you do analysis based on Renko charts. So again, this is a strong support zone, and price visited this particular support level twice, and as it moved up and retraced back, and this is something you will again spot a lot. So if you look at this chart, again price has taken support around this zone here, and most of the times price has bounced back. So earlier the bounce was limited, but the next subsequent moves on the upside were of larger magnitude. So this is again something you will identify a lot when you're trying to combine Renko chart and the traditional concepts of technical analysis. So in this particular chart, if you see, price has clearly taken resistance in this zone and then it has moved lower. Now again, these sort of charts are easier to see in hindsight, but that is what I'm going to cover in this series, when you need to identify these structures as strong resistance structures and when at times you need to let these pass. So just wait for part 2, 3, 4 and 5 to come out, because that is where I will be getting in depth with respect to Renko trading and combining it with traditional technical analysis method. So when it comes to trend line, again, trend line is a popular way of trading in stock market, and many traders use the trend line to trade on a consistent basis. So even with Renko, if you see, you can easily combine trend line approach on a Renko chart, and you can trade this either on the long side or the short side. So this is again an example of a long-term trend line that is acting as a support, and each time price comes close to the trend line, price has headed higher. So the advantage with Renko chart is that all these retracements are not that scary if you see, when you compare it with what a traditional bar chart or candlestick chart does to your overall psychological makeup. And therefore, when you combine Renko with traditional technical analysis concept, you do get this advantage of analyzing the overall trend better. And you can also identify these precise points that can give you re-entry in the market in case you have missed out initially on an ongoing trend. So one more application of Renko chart, which is highly underrated, is when you combine both Renko charts and Fibonacci retracement together. Now this is one thing that plays out on a consistent basis, especially if you're a pullback kind of trader, that is, who likes to trade pullbacks in the market. Now in this chart, I've just handpicked this example to demonstrate how you can combine both of these tools together. In this particular chart, if you see, price has initially moved up, and then the pullback that has happened has clearly taken support at 38.2% retracement level, and then the trend has again resumed. So most of the traders would use pullback trading with traditional charting methods like candlestick charts, bar charts, line charts, but I think you should look into combining Renko chart and Fibonacci together, as that is where you will realize the importance of Renko chart with respect to eliminating random noise as the trend is progressing. Now, very similar to the support and resistance concept, the trend line concept, and even the Fibonacci concept, Renko can also be combined with moving averages, and these still work very well. Now, the conditions in which Renko and moving averages have to be combined, that is something I will only cover in subsequent parts. Now, along with the traditional patterns, Renko charts even work very well when it comes to identifying divergence on the chart. So I've just taken up an example here of RSI divergence forming. This is a recent chart of Nifty. So clear structure of higher high was visible in the price section, and clear structure of lower highs was visible in the RSI indicator section. So again, through Renko charts, identifying some long-term divergence is a lot easier. And by long term here, I mean identifying divergence over a period of 4 to 5 months. Now, when it comes to traditional technical analysis patterns, again, these are very useful with Renko charts. And the main reason being that if you look at this particular section here, this is an ascending triangle breakout happening. So what a Renko chart essentially does is that it removes all the non-essential information in this section and only prints those sections of price action that are relevant with respect to your brick size. So again, identifying chart patterns through Renko chart gets a lot easier. So this is again a triangle breakdown happening. Again, because information is represented here in a concise manner, seeing and visualizing these patterns becomes a lot easier with Renko charts. Now, it is not that a bar chart or a candlestick chart is not useful. It is just that through Renko charts, you can visualize trend in a concise manner and can see these patterns playing out, and you can then act accordingly. So let me just tell you how I prefer to use Renko charts. Now, at the start of this video, I had clearly mentioned that what you are going to see in this series is my own adaptation of Renko charts. And therefore, let me tell you that I use both candlestick charts and Renko charts together. And for me, this combination actually works really well. I use these standard candlestick charts to analyze overall price action, and then I use Renko charts to identify the overall direction of trend and to find precise entry points that are not clear on the candlestick chart. So I don't use Renko charts on a standalone basis, but I do use it with candlestick charts and also with other charting techniques like market profile. Now, do register for this month's online training. It will be on February 29th, 2020. And even if you watch this video after February 29th, you can still access these trainings as these are available on our website. So the topic for current month is identifying strong stocks and sectors using CRS, that is comparative relative strength. Now, details are given in the description box below and in the comment section below. So that is the balance that I have found in my own trading, and that is something you have to figure out when it comes to your own trading approach. But what I'll be teaching you in this series, you can use that and trade with Renko charts alone. But over the years, what I have found from my own experience is that when you combine both the traditional way of seeing the price action, that is through bar charts or candlestick chart, and combine it with Renko charts, that is when you can get real value out of this charting type. So one of the reasons why I advocate using Renko charts and candlestick charts or any other charting technique together is because on Renko chart, gaps are not visible. Now that is where candlestick charts are helpful, because when market gaps up, you can analyze that on a candlestick chart and you can then see how that appears on a Renko chart. Now, by the way, let's assume price is at 1220 and next day price gaps up at something around 1260. Now, what will happen is that these bricks will automatically get printed. So all these bricks will be printed together. So that is why on a Renko chart, gaps are not visible, and it is not a good idea to take a look at historical Renko charts and then mark out your entry and exit, because you will never come to know where the gap had occurred on the chart and you won't be backtesting those particular charts in the right way. I hope this aspect is clear. So one more thing that I want you to understand is that Renko charts do lag a bit. Now let us assume that price is at 1400 and with the traditional method, I have set the brick size at 28. So that would roughly be 2% of current market price. So as price moves from 1400 to let's say even 1420, the brick would actually still remain red. Now the main reason being that your brick size is 28, and unless and until 1428 is crossed decisively, only then that brick would be plotted on the chart. And depending on your brick size, Renko chart will lag. Now this is something you have to understand as you start using these charting techniques. I hope both these aspects about lagging and gap is clear. Now let me come to one more issue that is raised quite often when it comes to Renko chart, and that is the repainting issue. Now this mainly happens when you're using the ATR method to plot the Renko chart, and let me explain what this is. Now this Renko chart that you see is very different from this Renko chart that is plotted here. And if you pause the video and go back, both these charts are of the same price range. The only difference being that when this chart was being plotted, the ATR value was at 5.35, and this was as of 3rd February that this chart is plotted. Now next session on 4th February, as Reliance started moving higher, the ATR value actually changed from 5.35 to 4. And look what happened. This entire structure of this Renko chart now changed to this particular structure. So this is called repainting issue, where the entire structure of chart changes as the ATR value changes. Now this is a very common issue and most of the traders do complain about this. Now to counter this, what you can do is you can opt for a traditional method to plot Renko charts where you decide the brick value. Now I have shown in the earlier section of the video how you can decide the brick value randomly, or how you can use the fixed percentage approach to decide upon a valid brick size. So what I will suggest is that if you try to use this ATR approach in order to plot Renko charts, be aware of this repainting issue. So let me now explain what are the key steps that will determine whether you succeed with Renko trading or not. So the first step is to always define the brick size. And the reason I say so is because it will take some bit of experience to identify the right set of brick value when it comes to the traditional method, or you can also adopt the fixed percentage method that I showed you in the live chart where I explained how the bricks were being plotted. Now when I say here be careful about time frame selection, what I mean by this is there are softwares that tie up printing of Renko brick with respect to the time frame you select. For example, I showed you this in TradingView. So be careful about that. If your software gives you a provision similar to TradingView, then start with higher time frame first. Now this also applies to the brick value. In case you're a beginner and you've just started trading with Renko charts, start with higher brick value and then begin to understand the method, and then you can set lower brick value to trade on extreme short-term basis. So if you're someone who likes to eliminate a lot of random noise within a trend, then do prefer combination of Ikeneshi and Renko for long trades and only Renko for short trades. Do not use Ikeneshi for short selling in the market. These do lag a bit and signals are not that clear. Now I have done a series of videos on Ikeneshi, so do watch those videos as well. Link will come up towards top right end of your screen. So let me just explain how we will be proceeding in this entire series. So I've basically planned about 12 to 15 parts, and the next few parts will be about understanding Renko and its concepts in detail. This will also be with respect to various techniques that are there in technical analysis. Now I'll be mainly covering up Renko from swing, day and positional trading point of view, and which is why I have planned these 15 parts out for you. One thing that I would encourage you to do is that stop focusing on the trend change that happens when you look at the Renko chart. So what I mean by this is stop paying attention to all these color changes that are happening which actually represent trend change as per Renko charts. And what I want you to focus upon is try and read the underlying psychology of the chart. Now this is something I've always emphasized upon even when I was discussing candlestick charts, and this in my opinion is the path to success when it comes to Renko trading. I'll also be including a couple of live videos that I do in short-term trading and in swing trading. Now this is mainly to help you understand all the concepts that we'll cover from part 1 to part 15, and then there'll also be some advanced Renko videos that will only be released on website. This is similar to what I did in intraday trading, but these series are not planned until September, October of this year. Now, having said this, anyone who watches the first 15 parts of what I'll release on YouTube, you will succeed in your own life with respect to trading. Just focus upon what I will explain you. Now, do join all these Telegram groups that are there for this channel. So the first group that you see is for general announcements, and the Renko group that I've created here, only Renko related stuff will be shared. And there's also one day trading group where only intraday related things are shared. So do check out these as well. So kindly consider hitting the like button and sharing this video if you find the content useful. Thanks a lot for watching this video, guys. Take care and be safe.